I just made $8,200 on a quick Tesla trade. I'm going to give you a full breakdown of how I did it right now. So if you come over to my chart and look at this, there were a couple things that I noticed. So I'm going to pull up the long-term chart here so I can draw on this thing for you. What I noticed right off the bat, and I'm going to even zoom it out all the way back to 2020, just so we can have a full, clear view. Get rid of these whiskers here. So what I noticed is we have a lot of support. A lot of support drawn in here, and the current price is right around $163. And if you just keep drawing, 163, 163, and it's about that same level over and over and over. Even coming back here to 2020, the peak was 163. So I identified that, and I said, you know what? I need to throw a tracker share on this. And what is a tracker share? What exactly do you mean by that? Well, it's one share. You go in and buy one single share. And the reason for doing that is, if you look at my watch list over here, I have so much stuff over here. It's ticking constantly. It's confusing. I'm going to miss it. If this drops into the price range that I need, I'm not going to be notified. But if I put it in my brokerage account and I see Tesla there every single day, just waiting for me. I am tuned in. I am zoned in. I am waiting for that price to hit. Worst case scenario, and I always say this, I spent $165 on a tracker share. Literally, the worst case scenario is that Tesla goes out of business, never exists again, and the worst I lose is $165. It probably won't happen, but the gain is going to be a lot more beneficial than me missing out on this trade. So first thing that I said, all right, we are locked in on that. We know that we need to drop below that level of, let's actually put a real number on it, that level of $160.83. Then we need to determine where actually are we going to execute this thing. Now, there was something else on this chart that I noticed. I noticed a gap all the way back here. And this is the benefit of zooming out of your chart and saying, where are things heading? And I looked at this and I saw there was this little tiny gap that happened back here. Now, you will hear me say this a lot. Gaps always fill. What is a gap? A gap is something where the stock price closes the day down here. So it closed January 25th down here. And in the morning, what happened? Well, it gapped up and it opened somewhere around $157 a share. So overnight, that little area of blackness was created. That is the gap up. So stocks gap up, stocks gap down. But once the gap happens, they often fill. They most always fill. It might take time. You can see here, this took about a couple weeks, but it finally filled this little gap. Right here, this gap took forever to fill. It didn't fill in here. It took all the way until April of 2024 to fill. This was from January of 23 to April of 24 to fill. It was 15 months, 16 months, but the gap finally filled. So I noticed that the gap was there. So a couple things. I coupled that support level with the gap with saying, all right, if it breaks this support level, where is it going to stop? Where's the next place it's going to stop? And it's going to stop right here, right at the base of the gap, where the gap started. So what happened? Here was the trade that was made. I put my tracker share on. I knew something was going to happen. And I was waiting for it to break this level. As soon as it broke that level, I executed my trade. My trade actually happened here on April 16th. It was not the best engulfing candlestick to end the day, but it was there during the day. It was $157.43. That's where my trade was executed. And you notice the gap actually, it filled it because there was a little bit of a gap in there. So you kind of gap down in the morning. Trade was filled. All right, I was in it. Not super happy with this day, but I'm in it. Now I'm looking to get down to that level. I'm going to zoom the chart out again, and we're going to look for that exit point of the gap filling all the way on that side of the chart. So before I zoom out, I want to just go through this and say, this stock price actually did drop below this is about the level right there. That's about the gap filling. So we did drop below that level. This is something important that I want to tell you guys. You're probably saying, well, why didn't you just run it all the way to the bottom? You're this experienced guy. You could have caught the bottom. That's not the game that I play. The game I play in these instances is to go in and have an exit strategy. Why? Because Tesla moves very quickly. When you find stocks like this, they are going to move very fast. You have to be ready to enter them. You have to strike when the iron's hot, and you have to have an exit strategy, or else you are going to get burned. So let's zoom this out again. And notice, guys, I'm zooming my chart in and out. This is what I do all day. I look and I go back all the way to 2020. I go back to 2015. It is very important to do those things. So let's go back and look. Here's our gap. And we notice that we had some wicks on this gap. Let's zoom into this gap specifically. You notice here, there were a couple wicks on top. There was some movement in there, but it kind of consolidated for 3 days. So what was our strategy here to exit? Strategy, look in that area to exit the trade. $143.76 is where the exit point was made. Now, this dropped well below that. This actually dropped to, let's actually pull up the real price. This dropped to a low of $138.80. Remember, not trying to grab everything. That's not what this is about. You're never going to buy at the absolute bottom when it's going up. You're never going to sell at the absolute bottom when you want to make money shorting. It just doesn't work that way. You need to play the patterns. And this was the pattern that I said, all right, we filled the gap completely. I accomplished my goal. Now, what happened in subsequent days? Tesla actually jumped up about 12% one day. And the following day, it was up another 2%. That's my point about this thing moving quickly. There was news that came out about their Cybertruck. There was news that came out about they're going to be selling cheaper cars, but it doesn't matter. You know that it's going to be volatile. You have to go in there with that predisposition that it's going to be volatile, and that's exactly what I did. So let's go through this real quick and just show you again a couple of things that I identified. I identified this area of this very strong support level and said, if it breaks this support level of, I think my watch price was like, my tracker share price was like 165. So I watched it on the way down. If it breaks that level of 160, we're going to be able to do something. It broke it. Then I said, if it gets below this area right over here and moves into this gap, I can go and execute the trade. It did. That was that 157.43 number. Then I needed an exit strategy. My exit strategy was exiting right when that gap filled. Then I thought it was going to go back up, and that's exactly what it did. And that is how you can make a very successful trade quickly on a stock like Tesla that's incredibly volatile with just a little bit of pattern recognition. So the cool thing about this trade, I actually found it in our community. I was on a live stream, which I go live twice a week, and somebody said, hey Mo, take a look at Tesla. I saw it, I identified it, I walked through everything with it, and I executed the trade live with everybody in the Patreon. Come and join me in the Patreon. It's $25 a month right now. There are a very limited number of spots available, but this is the type of stuff that you get. If I identify a trade, I am going to execute that trade live with you guys so you can see exactly what I'm doing, and I'm going to walk you through the entire way. Now, I also did another video where I made $32,100, and this was a different type of trade. It was a very long-term trade. It took multiple months to go through, but this is the video right here. Go and watch that.